What is going on, everybody? And in this video, we are providing you a state of the market and stock picks for June 2nd, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day in the week ahead in this lovely market. Yes, stocks do go down as well. So being said, let's get right into it. Why did we sell today? No, technical wise, talking about it yesterday, I talked about you can't just go parabolic, right? You have to back test old resistance to help us stair step and build a case to the upside and to essentially build that momentum that we need right now, considering that the market as a whole is not doing so hot. It's not definitely not all sunshines and rainbows for sure right now. But ultimately, again, the stock market is not what is going on in the world, and that is something I keep reiterating. Again, we do get corrections and stuff like that when events do happen, but ultimately, the market will continue to do what it is designed to do and push up. So being said, today, what really mattered today, we did come in for the beige book, and we were leading with that. Again, I didn't really know how much weight it had, but what really mattered more this morning was what Canada was doing in their rates. They raised another 50-point basis move, and they were talking about another 100 points basis move moving forward. So that being said, that is extremely hawkish, and typically what happens is the U.S. will follow after Canada or some of the other European countries, and especially after the talk with yesterday with Biden meeting Powell, and then you had again BlackRock coming out, a BlackRock spokesman coming out and talking uh, about how inflation is getting out of hand. He even the tone of his voice was very suspicious, in my opinion. He was very uncertain, very worried, and you can tell again by the tone of his voice and the way he was speaking about inflation. So, being said, and especially in a position like that, you would think someone, some analysis that's been doing something for some high caliber institution like BlackRock would be able to control the tone and stuff. But again, you are exposed to a lot of other stuff that some people are not. So, being said, nonetheless, technical wise, we were fighting yesterday to close above the 41.22. I think we ultimately ended, I think, a couple cents positive for the month of May. It was a very rough month, to say the least. And somehow we managed to make it positive, only to end back down today, again because of that Canada news with the 50-point basis move. Then you had the report again. Then it didn't really give a lot of information. It's going to be very generic because they don't want to scare the market. They want to directly interact with the market and put things out there. You also had some Fed members talking today, kind of just reiterating that we're in a good spot and kind of trying to lift the market up. Essentially, that we have a grasp on it. Again, they're not going to come out and straight say that they do not have a grasp on it. You need to pay attention to the action of the Fed, not what they are saying. But yet the market is driven off of emotion, driven off of headlines. So if you got Fed members talking about everything's going to be okay, it's going to be okay, they might just be trying to calm the market down, perhaps for another big sell-off. Again, I don't think we're going to sell much further than at 3,600 if we even get down to that level. So I'm talking about this lower level here. I'm talking about this for about a month when we started getting to some of these lower lows. Again, turning point at some point here. I'm kind of thinking we come down to a lower high here. So I'm kind of looking around that 39.55 mark. Could be a possibility. Maybe even just wick into the 3,900 and wick back. Is kind of what I'm thinking. We could potentially start pushing. Really, again, it depends on how we open. But I don't like the fact we've been flirting with this 20 EMA. We've been sitting on this way too much. Even if they do come in a 50-point basis move, again, we started tapering some of the bonds today. That did start today, so we have that, and trying to help alleviate what is currently going on. And that's kind of where we sit. And now we got till the 15th to really determine what is going on as far as what the Fed is going to be, what kind of action they're going to be taking. So any kind of headline news from the Fed or anything like that will definitely drive the markets. Again, I don't think there's any other. We got some employment data, I think, at the end of the week. And then aside from that, that's going to be our gauge going into the meeting. We'll have to see. Right now, no news is good news. So that could be a potential catalyst to start pushing back up. Again, we have to gauge and see. Really don't want the market breaking this 40.65. We've been floating around that 20, which is fine because that's not going to give you an exact. It's not exactly 41.16, but it floats around there. And you've seen this. The market kind of floats around here. Even when you did the retest, it didn't quite tag that. It floated around there. And so that's what's that. When you're looking at these higher time frame EMAs, it's roughly around that mark. So again, we are holding the daily. That's a nice retest of the 20 EMA daily. Again, we need to hold this tomorrow. If we break below this, we're going to head at least back down to this the 39.67 in my opinion. So we want to see how we open for this. Again, the Canada news wasn't the greatest. Become overly hawkish at this point to try to combat inflation. Again, you're more concerned about saving face than you are saving the markets. So that it could, again, drive fear back into the markets. So we're going to do a 75-point basis move. We're going to do a 100-point basis move and then see where that goes from there. That's essentially the way I've been seeing it. Again, if we go 75 or 100, again, it's every 25 points above a 50-point, what a 50-point basis move would be adding 5% correction to the bottom of this range. So another 5% here, that would be 75. You're talking about 100. You're starting to flirt with this EMA. So this is why I don't think a 100-point basis move is something that's going to be considered. They're not taking it off the table just in case. Just the thought and talking about it will freak the market out. Even a 75-point basis move, if they keep reiterating a 75-point basis move, it could drive us down. 50 points seems to be good. Even, again, Kathy Woods has always said that 50-point basis move is a lot, that it doesn't need to be done. But again, they're overcompensating in hopes to drive down inflation quicker than what it's currently dropping at. It is dropping, but it's not dropping in the amount that the Fed wanted to. So they're trying to do that by overcompensating by raising rates quicker. So we will see that meeting that they had yesterday. Again, there's not really a lot of insight there. We may get more insight on the next Fed meeting. But until then, I think we're going to wait for the unemployment stuff, and then we'll take it from there. Again, we got a lot of resistance to break back through. To be honest, if we do open up above this, I could potentially see a nice run up to the trend line. Roughly, again, you got a lot of resistance here, so it's not going to be a smooth push up. I might get a little runner here, and then between the 41.93 mark up to the 42.72 mark, and then you're going to run into resistance again. So again, any kind of push up is going to be a choppy push. Again, no news is good news at this point, so that's kind of what's driving the market up, in my opinion. Again, this is strictly my opinion and my thesis on how I'm seeing the market correct on these moves. It could be right, they could be wrong, but they've served me good thus far. So being said, Bitcoin sold off just like the market. Again, there's been a lot of updates and stuff going on with the different chains. Excuse me. The Luna stuff initially got the market scared on this move here. And then you had Ethereum scare on another one when they were pushing an update. I think that's what this spike was the other day. And then today, again, it's just the market in general is essentially being guided by, or Bitcoin is essentially running in parallel with the market. So the market sells off, Bitcoin will sell off. But one thing is it's a lot closer associated than your gold and everything else, which is surprising because people thought gold would have been up like $500-600 by now, and it is way down at 172. Well, you got Bitcoin that's running and actually kind of again running in parallel with the market. So going into tomorrow, again looking at all the regulars for the most part. Again, Tesla. Getting rejected hard here. That was a first reattempt to try to hit that 20. Even if I pulled out my studies, this whole period here, we had about a 2 week period where we didn't even retest the 20 EMA. I thought we would have rejected hard this first attempt, but we didn't. We actually broke it. I think that was more so the market wanted it above that monthly close, but now that monthly is closed out, it pops straight back down on the first day. In my mind, that's not a good sign. And then you got this downward trend. I think we could come down potentially back down to the 700. Will we see under 700? At this point, it's hard to tell. Again, we need a bigger catalyst to the downside. I still think the market can still sell. Don't get me wrong. I think there's a strong possibility that can happen. But when you're talking about Tesla, I think if it does drop anywhere around this 660 mark, you're going to get a wick out of here. It's going to be briefly, maybe for a couple hours before it pops back up and starts running. In my opinion, again, this is one big thing to keep in mind. I'm talking about Tesla here. Let me go ahead and do this. I should make this actually more part of the beginning here now, because we need to be watching banks, and this is really what matters. And I've been calling this out for the past couple of days on this run. JPM had a ridiculously long ascending wedge here, and it finally broke today. I thought it was going to break last Friday, but it didn't. And then today it actually broke. Now we have to be mindful that the banks have been what has been driving the market up. Value has been what's driving the market up. Today we finally saw a rotation of tech trying to push, and tech tried extremely hard, but it eventually flipped because of this sell, and it started selling off. We need to watch this. I'm not saying that this is going to just flatline and die off, but you have to realize that even a move like this, from the point of this is where the Fibonacci's come in handy. I don't always use Fibonacci's, but when I do, it's normally like during these times. So even you're looking at 38.50, I'm more looking around a 50% pullback on this. So you're looking at 123 on JPM, I think is a strong possibility. So you're looking at roughly around here. I think we can get one or two more strong legs push down for correction. Again, you want some kind of retest of some of these levels. You don't want to just go straight up, because then you're going to get some really hard flushes that you are definitely not going to want to be in. Again, you typically only get 3, 4. When you start getting 5, when you start talking like 5, 6 pushes out of a stock, continuous runs like this, you're really pushing the limit for this thing to start dropping. So like I said, normally second day pushes are the best days, and third days are pretty strong. And then come around that fourth, fifth day, you start seeing a lot of weakness. And then this particular one was pushing a lot longer. It normally doesn't push this long. And then you finally got a flush. So we want to see if we drop below this 129 tomorrow. Again, if we do, the 123 is essentially, I think we're around that 50% is on the Fibonacci that will allow us to potentially make a higher low, because that's what I'm looking for in this pullback, is a higher low on the banks. You have to realize that all banks are doing the same thing. This is why I said you need to be following the banks. The banks are guiding the market right now. Again, could do another leg, still be a higher low. This is your low right here. So you still got quite a ways you can pull back. Again, you can pull back down here around the 300 or closer to 300, still be a higher low. I don't think we'll drop that low on Goldman Sachs, but anything is possible. It's one thing to keep in mind, is anything is possible in this market. Again, another break here on Bank of America. Now this could be potentially a pullback retest on Bank of America. We'll go back to JPM. You had a break. You didn't really have a retest. So that's what I'm saying. JPM could drop a whole other leg down to try to get a retest on this thing and before it starts ripping. Again, it doesn't have to sell all the way back down. Typically, it does about a 75% move. Again, 125. Doesn't have to. It could keep running. Majority of the time, about 75% of whatever that ascending wedge is where you're going to touch. Descending wedges is about the same thing, about 75% or retracement of that wedge. But we'll have to see where we end up. But again, biggest thing is to keep an eye on the banks and see where they are. Value has been taking a massive hit too. Again, these are things that have been holding the market. Walmart churned and started selling off again, right? We got a couple of straight day run. You're going to get a pullback. It depends on how far of a pullback we get. Again, looking for a higher low for potential reversal. Again, no news is good news in my opinion. So kind of watching that. Target's the same way. Target had a couple day runner, and then I got rejected. Again, it's first retest and got rejected on these values. And then you had things like Amazon, who's had a major day, and this you've had about four days here, a massive pushing on Amazon. This could be a potential big play to the downside tomorrow. Looks like it's actually breaking after hours. Could be a big potential one to watch tomorrow. This thing could really sell at least down to the 23.35. Again, 75% retracement. You're probably looking more around that 2200. Could be a strong possibility. But if we get down to there would be a higher low, which we want to see, and then potentially start pushing up. One thing we don't want to do is break this 20 EMA. So you might hold at the 23.34 and then start pushing back up. It's kind of what you want to see. If it does break back below here, we could potentially start seeing a lot more selling towards the downside. And so, again, tech really tried to push today. Like I said, the banks finally gave out. Your hope today was that tech push, and it really tried hard. But then that news about Canada and everything came out, and it tanked tech. Anytime there's any kind of news about massive rate raises or anything like that, tech is going to get hit. And if tech is trying to lead, you can't have headline news like that because it's going to sink it. And then that's the only thing holding the market up, since value and banks have been tanking after their multi-day run. It was a rotation for tech, and then you had that news, and so the market just lost it and dipped back down below. Which is not great. So again, it's for tomorrow. So watching Amazon, watching Tesla, want to kind of really see what they're doing. To be honest, I've been playing a lot of the index. I've been playing some Tesla here and there, and then I've been watching Amazon and Shop closely, and I've been watching AMC and GME, but they're, I think, getting ready to sell off more as well too. So we really have to see. You can use the mem stocks as a gauge too. If the mem stock starts selling, that means there's a lot of weakness in the markets. If everything starts selling and you have GME and AMC starting to sell, those will be the first ones people sell. Again, because of forward PE, right? These companies are going to make all these. There's no evaluation that justifies GME at 121. So. But nonetheless, Shop break again, retest. This could potentially be a big sell back to 321. I think Shop could revisit these lower levels. It's been extremely weak, and it's been a lower diluted version of Amazon. And if Amazon starts selling, I think you get a bigger move on Shop, so that'd be one to watch. Again, during these times, you really want to keep it tight. Play the same stocks is something you need to be doing right now. If you are not investing and you're trying to play daily intraday trades, you need to be playing the same thing and be very comfortable with what you're trading, not jumping to momentum stocks and like that. Again, the trend is down right now, so you play the trend. And sometimes, if you're trying to play the uptrend, you want a second day before you try to play it. Or if you're at a really strong support and you see that the market is holding. And what I mean by holding is it's been holding a good, strong majority of the day. And then typically it would get a reversal out of that. But when you get these parabolic moves, like I said, you got 3-4 days of this, you're going to expect this thing to pull back to some extent. And these things have been pulling back close to like 65% almost of the retracement from the bottoms of these things. So you need to be careful. And again, you're in a bear market, so this thing can continue to flush all the way down to those lower levels. So just be mindful of that. Again, this new market is totally driven by Fed, totally driven by what's going on. So you have to be very careful what's going on here. Again, if you're investing dollar cost average at these levels, I think is smart, in my opinion. Again, not financial advice, but if you're looking 5-10 years down the road, it's a good time to be doing so. because again, you're not going to have another chance to get Tesla at 700 or 600. Some of these levels you're seeing here. So being said, if you've made it this far, I appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.